Munson Portfolio Wealth Advisors President and CIO. Lee, we got to start with Tesla. Your take, is this enthusiasm based on fundamentals, a massive short squeeze? What's going on?
Oh my God, okay, so when I saw this, because, remember a couple months ago in December, we started seeing it break 400 and then it went to 420 and everybody got excited. But these last few days, this reminds me of 2008 when Volkswagen had the big short squeeze, when it was announced that Porsche had a secret holding in it. Everybody got caught off guard. Everybody went crazy. So I think if you just look at a chart, look at any chart that goes back 20 years on Volkswagen, and I think that you'll see a redux of what's happening in Tesla. These are short squeezes, right? You're putting money more in the market. You've got the index people putting more money in, and nobody wants to sell this thing. And heaven forbid you try to go against the grain. So this is just euphoria, enthusiasm. I remember feeling left behind, not taking advantage of the Volkswagen short squeeze in 2008. But after a few weeks, it dissipated. The stock started coming down. And of course, if you look at a long-term chart, thank God I didn't do that. I didn't buy any Volkswagen back in '08 for any of my clients. I think you ought to just sort of listen, we should be happy there's euphoria. It means there's people still out there wanting to speculate.
Mm-hmm. Well, yeah, Lee, I wanted to ask just what this means for the broader market. Some people might say, well, Tesla does what Tesla does. It doesn't really mean anything. But I guess in your view, there's almost a positive view that there still are some animal spirits out there because, we had a guest on the program yesterday saying there's a bubble out there, but the only bubble is in pessimism.
Absolutely. No, I think it's great to see this happen. Now, I don't want to see all the FANG stocks do funny stuff like this, right? We saw in 2000, some funny things, how you'd see, like a Walmart, go up 50% in a few months during, right near the end of the bust. You'd see some of these .coms, quadruple or triple, kind of like what happened to Beyond Meat last year. So while I love to see it because I think it is bursting that bubble of pessimism. I think that what's encouraging is that we've ring-fenced it just on sort of the darlings of the day. And Musk and Tesla, that kind of represents the hot, speculative, forget fundamentals, forget everything. Let's just ramp this thing higher. And I think that's good for the market because it shows that there's still interest. But it's not like I'm going to go buy that and stick my foot in it.
Hey, Lee, I want to talk about what's been going on with the markets overall. So we've had a lot of volatility enter the markets, especially since the news of the coronavirus outbreak. Now, the last couple of days, it's been a little bit interesting. So we had that huge down day on Friday. We've seen an up day today and also on the heels of yesterday's rise. What are you doing in this environment? Do you think now is a time to buy stocks, or should investors maybe stay on the sidelines until things shake out over the next couple of weeks?
Well, clearly there's a lot of people who want to buy this dip, not me. Here's the thing. I remember SARS. I remember the Ebola mini crash of 2014. We got to wait till there's some panic selling, and Friday means nothing. I want to see the S&P down 8, 9, 10%. Look at China. FXI, the ETF that tracks China, it's almost down 10%, but it's the same level it was in December. Look at Hong Kong, the only thing that's definitely down more than 10% in the last couple of weeks. It's still just going back to December prices. So if you want to take advantage of this, something that's going to happen every few years, where there's going to be a pandemic because they eat like disgustingly weird meat products over in China. I'm a vegan. I've got no sympathy. But what I do say is that you want to wait till you see some real cracks in the eggs. And until the S&P starts to panic because of it, I think you can't buy emerging markets here because it hasn't gone down enough. Just think about emerging markets down more like 15, 20%, the S&P down 8 when, there's a panic or there's too many people. Also, take a look at news headlines from 2014 around Columbus Day, and you can see that moment where Ebola was just this thing in Africa, and then all of a sudden we had 2 or 3 days where people in America really started to panic. I think it's going to take more weeks for this to happen. Right now, I think this volatility, it's just an excuse for people to take profits. Don't read into it. Wait for a real correction.
So is that what you're doing? Are you taking profits here?
No, I'm doing nothing. I know nobody wants to hear that, right? We're supposed to say do something. I'm still buying REITs. When I have some new cash, I'm still adding to, say, small cap value, international. I think if you have to commit some money today, I would say don't necessarily do an emerging right now. You just look at sort of broader Europe. It's down 5 or 6% for the year. So I think there's places where you can dollar cost average in today. But if you're looking for the play, I would sit tight and wait for some news announcement where this virus gets real bad before it gets worse, and wait for it to come in. I mean, come on. We didn't even hit 3350 on the S&P. We're 32 and change. You're not going to get me to come in here and start screwing around till I see that S&P closer to 3,000 or 2,999. If not, we're just day trading around. But again, if you need to commit new money, I think it's fine to commit new here, but this isn't where the play is. This is not where you sell your bonds to buy stock. 29.99 on the S&P, down 20% on emerging markets. Then call me, I'm in.
So speaking of news, Lee, we were supposed to, I guess, get the start of this presidential election last night, though really nothing has happened. But that is now a thing that is happening. We've heard about it for a year, that there would be political risk in 2020. Well, now you got it. As you look out over the next 9-10 months, is this something that you expect to be trading around, or are you just kind of content to watch the political process play out and, if need be, adjust your market view after we actually get the vote count on November 3rd?
My need be is always be free roaming wolf. I'm hoping that we're going to get some, remember how Dalio, that hedge fund guy, is all like, in March is going to be the primaries, it's going to be decided, there's going to be a bunch of volatility. I don't know if there is, but I'll tell you where the plays are. Anytime between now and the Democrat primary, contender being chosen, I want to play that volatility, right? But the problem is everybody's saying it. Everybody's expecting it. And I think if you get like a Bernie Sanders, you're going to see the market dip, even though the dude's not going to win. But if you get a Biden as a clear front runner, I think the market melts up. So if you're holding a bunch of cash and you've sold off things, waiting for some big correction before November, I think you're a fool. I think what you have to do is you just have to, have the attitude that if you see a big downdraft because of some election news cycle, you go buy it. And quite frankly, we need any little excuse to buy corrections. I just don't think the coronavirus is as bad as it could be, and the discount is not as big as it could be. But what if in 2 months, coronavirus gets even worse, and we have a surprise in the Democrat primaries? I mean, you could have a 10, 12% correction real easy. I think you got to get in there and start stabbing the bid.
Play along with me for a second, real quick. If somebody calls you, they've got some cash, they're like, I want to buy something, and it's not REITs. If they say Tilray, Bitcoin, Tesla, or Beyond Meat, which one do you go into?
I know my answer.
I hate you. So pot stocks, sort of left for dead. Bitcoin, no way. Tesla, no way. And so what was it, Beyond Meat? Yeah, sure, Beyond Meat, it's down 50% from the highs. Now, please, don't go do that. But if you have to pick between 4 silly things, it's not because I'm a vegan, it's just because Beyond Meat has already come back in from its 200 high. I mean, look at this, 111 bucks. It's growing, it's just pricey. I think Beyond Meat you can buy. Leave the other 3 to degenerate gamblers.
All right, it's good to clear that up and get your veganness also out there among all your comments today. Lee Munson, fantastic. Thanks for playing along.
Thank you.